It's extremely cheap. It was extremely cheap at 70,000. Well, now it's triply extremely cheap. It doesn't matter. Don't overthink this. Bitcoin is the best asymmetric trade we have ever seen in our lifetimes, isn't it? You're correct that for the first time in history of the NASDAQ was down double digits, as were long bonds. So this is a era where never before have a balanced 60-40 mutual fund or let's say quasi-hedge fund, a balanced mutual fund, both assets, bonds and equities suffered double-digit drawdowns. So usually, as you know, there's a balancing effect when equities sell off, a flight to safety takes place in bonds. But bonds got crushed because of inflationary concerns, as you know. But I spent my life in high yield bonds, so I wasn't a treasury trader as much as a credit trader, and that's where I like to apply my expertise. So I believe over the next couple of years, credit traders will appreciate Bitcoin for the instrument that I have studied it as, and that is as insurance against default of sovereign nations. We had no idea what the leverage that was in the DeFi space, you know, the Celsiuses of the world and the yield and staking that took place. So there was some, I'll call them macro events within the crypto ecosystem that certainly impacted our favorite digital asset. I think you and I both agree there's only Bitcoin and then the rest are, you know, S coins. What I will say is this, in any ecosystem, when leverage gets excessive, you will see leverage unwinds. Well, that's what's happening within the traditional finance markets right now. Leverage is being reduced. Money is being taken out of the system. And when that happens, you see asset prices fall. In the crypto space in particular, I was very surprised. I don't know how you feel about it, but I was quite surprised with the, the co-integration, if you will, the counterparty risk that was present in the system. Some of the truly Ponzi scheme natures that were going on. And I bring that word up because just yesterday, Dylan LeClaire posted part of the default filing of Celsius, and basically it calls out the Celsius Ponzi. So it's incredible that this existed. That being said, look, you got to live and learn. You got to earn your battle scars. Hopefully people will learn that there's Bitcoin and then there's other digital assets. And Bitcoin is the only digital asset that solves the fiat Ponzi. As you eloquently put, you can't taper a Ponzi, but this was a confluence of events that caused Bitcoin to come down from highs. I think over the next 2 years, Max, to answer your question in 2 sentences, people on Wall Street will start understanding that Bitcoin is actually an insurance policy. And as an insurance policy, it actually possesses long volatility characteristics, which should be valuable in a risk-off world. It hasn't happened this last quarter, last half year. I'm disappointed with that, but at the end of the day, it means it's cheaper. It means a lot of people can get into it. It's extremely cheap. It was extremely cheap at 70,000. Well, now it's triply extremely cheap. It doesn't matter. Don't overthink this. Bitcoin is the best asymmetric trade we have ever seen in our lifetimes, isn't it? Russia is a very large producer of oil and natural gas. I believe there will be a time when they do not desire to price their not valuable natural resources in US petrodollars. I think that you will see them gravitate towards potentially pricing valuable natural resources in digital energy, which is Bitcoin. Now, notwithstanding whether they do that or not, you have seen reserve banks around the world, central banks around the world, reduce their treasury, US treasury holdings from 71% to below 60%. I anticipate that to accelerate as access to those reserves can be turned off. After all, I'm not going to say I agree with what's happening with Mr. Putin, but people need to extrapolate. If they can restrict access to your savings, to your central bank reserves, I think it's a very, very substantial event. Look, all we can say is this. There will be haters of Bitcoin, but over time, countries adopting Bitcoin for logical reasons, including hyperinflation. So another gentleman that we don't always agree with, Steve Hanke, he published a report showing true inflation, Hanke inflation numbers at various countries around the world, starting with Zimbabwe, but Turkey, Lebanon, all these countries, their posted rates on one hand, his actual inflation number is almost triple the posted rates, and the posted rates are usually 50% annualized. So here's the truth. It won't necessarily be a big country that adopts Bitcoin right away, although I think there is a good chance that a non-G7 but quite important global economic powerhouse adopts Bitcoin as a reserve or legal tender. That being said, it's most likely to be the smaller countries around the world, like El Salvador. So Jeff Booth and I just got back from a trip to Madeira. We met with the president of Madeira. I will tell you that El Salvador is a beacon of hope for the smaller countries around the world that feel that they are constrained by central bank policies, particularly if they hold the US dollar, if they use the US dollar. I view everything through a credit lens. So I think of Bitcoin as being, as you said, the equivalent of a credit default swap on a basket of fiat currencies. Now, if we just took the top G20 countries around the world and we looked at their on-balance sheet obligations, so in the case of the USA, $30 trillion, and in the case of the USA, their off-balance sheet obligations, such as Medicare and Medicaid, of $160 trillion. To make the math easy, let's take that $200 trillion obligation. You can go to the credit default swap market that exists for sovereign nations, and you can look at what the rate is, the 5-year default rate on the United States, the rate that they're charging for default insurance. And that rate multiplied by the on-balance sheet and off-balance sheet obligations, when you make an adjustment, as I term a tenor calculation, to move it from 5 years to further out in the maturity spectrum, the value of all of those countries added up according to the open market rates of the credit default swap spreads of the G20 countries puts the value of Bitcoin at over 400,000 US dollars per Bitcoin. All I know right now is it's, using my methodology, worth over 400,000 US. It's trading at 1/20th of that value. I'd say it's cheap. I'm not sure how other people look at it, but by that metric, I think it's awfully cheap. I don't overthink things. When I can buy something, it's equivalent of $1, I can buy $1 at a nickel, because that's basically what I'm seeing. I like to close my eyes and buy that insurance for a nickel, especially when, as I say, if you think of it as fire insurance, well, the forest fire is right up to our back porch right now. The global credit system is teetering as risk gets withdrawn from the system, liquidity gets withdrawn from the system. So over time, I think that many other credit managers may come to think of it the way I think of it.